International sanctions have long posed significant challenges to Iran's economy, but a new strategy is emerging: Bitcoin mining. This video dives into how Iran is leveraging Bitcoin mining as a potential workaround to navigate severe international financial restrictions. Iran faces broad international sanctions, limiting its access to global banking systems and traditional trade routes, leading to economic isolation. Cryptocurrency, particularly Bitcoin, offers a decentralized and non-fiat-based financial network, potentially bypassing conventional banking restrictions. The core strategy involves using cheap, subsidized domestic energy to mine Bitcoin, creating a valuable digital asset outside the sanctioned financial system. Bitcoin mining is energy-intensive, and Iran's low domestic energy costs make it an attractive location for large-scale mining operations, often relying on subsidized power. Mined Bitcoin can be liquidated or directly used to purchase essential goods and services from international partners who accept cryptocurrency, facilitating trade. However, this strategy is not without its implications and challenges, both domestically and internationally. Using cryptocurrency to circumvent sanctions raises concerns regarding money laundering, illicit finance, and the potential for increased scrutiny from global regulators. The international community is grappling with how to address the use of decentralized finance for sanctions evasion, leading to a complex and evolving regulatory environment. In conclusion, Bitcoin mining offers Iran a novel way to navigate economic pressures, but it's a double-edged sword. This scenario highlights Bitcoin's growing role not just as an investment, but as a critical element shaping global financial and political landscapes. The long-term sustainability of this strategy depends heavily on controlling energy consumption, managing internal regulations, and adapting to international reactions.